The current time is Saturday evening, December 20th, 2025, and as we sit here, the market is officially closed for the weekend. The final bell for SMX, Security Matters PLC on NASDAQ SMX, rang yesterday, Friday, December 19th at 4 p.m. EST, leaving the stock sitting at a live price of 176.03 USD. That represents a significant intraday jump of 19.89 points, or a 12.74% gain during the final session of the week. While most people are looking at the weekend headlines, the real story for SMX is written in the tape from the last few weeks, where the stock has staged one of the most aggressive and misunderstood moves in the small-cap world. You might see a chart that has advanced more than 1,900% since November and think you're looking at a standard speculative bubble or a coordinated pump and dump. That is the expectation. The reality, however, is that we are watching a structural repricing event where a company once ignored as a penny stock is suddenly being valued as a vital layer of global supply chain infrastructure. The gap between how the market used to see SMX and how it sees it now is where the opportunity and the danger live. For a long time, investors treated this ticker like a science project. The company talked about molecular markers and physical to digital tracking, but until very recently, that felt like a distant concept rather than a commercial reality. People compared it to looking for investment help on random investing sites, assuming it was just another microcap with big dreams and a thin balance sheet. But look at the volume. We aren't just seeing retail traders on a Robinhood app chasing a green candle. We are seeing institutional level interest in the way materials like gold, plastic, and cotton are verified. While the common belief is that SMX is just a high beta trade for people bored with Tesla stock or Apple stock, the deeper take is that SMX has solved the trust problem in a way that traditional audits simply cannot. When you think about online investing today, you usually think about buying a slice of a company and hoping the management executes. With SMX, you are essentially betting on a new standard for how the world handles physical assets. The expectation was that global supply chains would always rely on paperwork, certificates of origin that can be forged or lost. The reality SMX has introduced is that the material itself can carry its own identity. They are embedding sub-molecular particles into raw materials. Imagine a bar of gold that has its entire history written into its atoms. No matter how many times it is melted or reshaped, the SMX reader can identify exactly where that metal came from. This isn't just a tech play, it's a settlement layer for the physical world. This realization is what caused the stock to reset from the single digits up to the levels we see today. It is a massive shift in valuation logic that happens when a company moves from theoretical to essential. If you've been doing your self-investing through an individual brokerage or using the Fidelity mobile app to track your portfolio, you know that the most violent moves happen when the market realizes it was wrong about a company's fundamental category. SMX spent years being categorized as a struggling tech firm. Now it's being viewed through the same lens as infrastructure. If you are using something like Schwab Intelligent Portfolios or a SoFi Robo-Advisor, you might not see SMX pop up because of its historical volatility, but active traders using an interactive brokers platform or the Fidelity trading platform are seeing a very different picture. The liquidity on the NASDAQ for SMX has tightened significantly because the float is relatively small. When you combine a small float with a sudden aha moment from the market regarding molecular traceability, you get the kind of verticality we've witnessed recently. Let's talk about the recent price action, because it's been a wild ride for even the most seasoned investors. We saw SMX touch highs near $490 earlier this month before settling into this current consolidation phase around the $170 to $180 range. This is the classic tension phase. The initial surge was driven by the market discovering the company's success in cotton traceability pilots and its work with the DMCC in the precious metal space. Now, the reality is setting in. Investors are looking at the cash flow and the recent $5 million equity purchase agreement amendment. Some see this as a sign of dilution, which is why the stock took a breather a few days ago. But the contrarian view is that SMX is loading up its war chest to scale a technology that has just been proven on the world's biggest stages. While some might prefer the safety of Fidelity mutual funds or the steady growth of NVIDIA stock, the crowd moving into SMX is looking for that foundational shift in how industries operate. Before we go further, I want to hear from you. The movement on SMX has been polarizing to say the least. Comment below how many shares of SMX you currently hold, or if you're just watching from the sidelines for now. Does this feel like the birth of a new industry standard to you, or are you skeptical of the recent price levels? Let's get a discussion going in the comments about whether you think the physical to digital bridge is actually the next big thing in investment. The business model here is what keeps the narrative alive. SMX doesn't just sell a product, they provide a solution that includes a physical marker, a reader, and a blockchain-connected digital platform. This isn't like buying Robinhood fractional shares of a consumer brand. It's more like investing in the barcoding system before barcodes were everywhere. They focus on brand protection, authentication, and track and trace capabilities. Recently, their focus has expanded into the circular economy. This is where the plastic cycle token comes in. By assigning a molecular identity to plastics, they allow companies to prove their recycled content levels to regulators. In a world where ESG reporting is often criticized for being fluff, SMX is offering a way to make it empirical. This is why the stock is being discussed alongside Fidelity wealth management strategies for impact investing. It's moving beyond the realm of maybe and into the realm of must-have for global brands facing strict European and American environmental regulations. Historically, SMX has had a rough path. If you look at the older reports on your Fidelity brokerage account or check the long-term charts on Interactive Brokers, you'll see a history of reverse splits and declining prices. That's the baggage the stock carries, and it's why many veteran investors were slow to buy into the recent rally. The expectation was that SMX would follow the same pattern of failing to reach commercial scale. But the reality of 2025 is different. The partnerships are no longer just press releases. They are active pilots with global consequences. When you see the company being described as the Google of materials, it's because they are indexing physical goods in the same way Google indexed information. If they succeed, every pallet of metal or bale of cotton in a global supply chain becomes a searchable, verifiable data point. The macroeconomic pressures are also playing a role here. With geopolitical fragmentation and the need for secure, verifiable supply chains, governments are becoming more interested in what SMX offers. This isn't just about corporate transparency, it's about national security. Knowing the exact origin of rare earth minerals or high-tech components is becoming a priority for the world's largest economies. This is why the institutional activity has picked up. We aren't just talking about people doing online investing for fun. We are talking about sophisticated players who understand that the old way of doing business is no longer sufficient. If you are using SoFi active investing or exploring Fidelity ETFs that focus on supply chain technology, SMX is likely a name that has started popping up on your scanners. Looking forward, the scenarios for SMX are as dramatic as the stock chart itself. In the bullish scenario, the company continues to announce successful pilots and begins to lock in long-term, high-margin licensing agreements across multiple industries. This would justify the recent repricing and could even lead to another leg up as the market realizes the sheer size of the addressable market. The risk, of course, is that the company struggles with the transition from pilot projects to full-scale industrial adoption. Scaling sub-molecular technology across global manufacturing lines is no small feat. There is also the constant pressure of maintaining a NASDAQ listing and managing the balance sheet without excessive dilution. Investors who are used to the volatility of Robinhood crypto or the aggressive swings in SoFi stocks will be familiar with this kind of risk-reward profile. But for those coming from a more traditional background of Fidelity IRAs and conservative mutual funds, the SMX story requires a high degree of conviction. The catalysts to watch in the coming months involve the closing of their recent funding rounds and any further news regarding the plastic cycle token's integration into carbon credit markets. If SMX can prove that their technology doesn't just track material, but actually creates a new class of digital assets, the valuation could enter a completely different atmosphere. This is the settlement narrative that has the potential to exceed even the loftiest current expectations. While the general market narrative is focused on the next move for NVIDIA stock or how interest rates will affect Apple stock, the smart money is looking at these foundational layers that enable the next phase of global trade. Whether you're using Robinhood investments or a sophisticated interactive broker's account,